Alright guys, today we're going to be talking about EMA lines. This was requested to me by one of the members of the Discord. So we're just going to be talking about how you can get potential entries or exits from EMA lines. The ones that I would use for day trading are the 9 EMA. You can use the 20 EMA and then definitely use the 200 EMA. And I'm just going to close the view up. And then, yeah, that's fine. All right, so this is IMPP. This is a stock that you guys traded on Friday with, well, Moneybags wasn't there, but traded it Friday. If we look at IMPP on the open, I don't know if this is a top gapper on the open. But as I've mentioned before, you usually want to take the play when there's a break over the 200 EMA. So this yellow line is a 200 EMA. And we see it gets rejected here. Rejected again, and then surges through. So a good entry would have been probably this next green candle right here, because that's confirming that it's staying above. So would have wanted to get in around 225 for the price. And I mean, this stock just ended up going up all day. You could have held all day and been fine. But proper exit once these Bollinger Bands started tightening up, once the volume started dying down. You see how this volume candle right here is like quite a bit bigger, more than double this previous candle. That could mean some volume exhaustion, which basically just means the buyers are could be getting tired out, not going to keep surging up. So that could have been an exit. And then I have the 9 EMA and the 20 EMA. 20 EMA is this thick blue line. You could have been potentially looking for a rebuy around this 9 EMA, and you see this big buying wick dip down to this 9 EMA, the red line, bounce back up, but it couldn't hold, and then it hits this 20 EMA, and then it's holding the 20 EMA here. Here we got a green candle. I probably would have been a buyer on this candle. It's proving that it's holding above. Held here. Nice buying wick off of that here. I would have been in around here on this next play. These are good for quick scalps. You could have gotten from 230 to 240 basically. Good 10 cents on a $2 stock is pretty good. You could have done the same thing here. It did break through the 20 EMA a little bit here, but you can see right when it broke through, the buyers brought it back up, and you see it starts to curl. Does this little curl, right? So you probably could have been a buyer over the high of this candle, the high of the body. So like right around here, could have been a buyer because it's curling. This dropped below, it wanted to come back above it, and here it's holding, it's getting back above for sure. You can also use this in coordination with other indicators like the MACD. Let's look at the MACD here. So here, MACD is starting to flatten out. It's kind of starting to curl off this zero line just a little bit. And then this next candle, we for sure have it curling back up. So that's another sign. And that would have been a big play. 230, 231, up to 246 for a high. That's pretty. Let's see how much that is exactly. How do I label this here? It's about 6% gains. That's pretty good. And you could have just been doing this basically this is choppy. You would want to been pretty careful with your entries off on this, because if you have a 3% stop, I mean, you can get, if you tried to, let's look at right here. This candle, let's say you tried to get an early entry off this 9 EMA, this red line. It bounced and it kind of held at first, but then you look, now you stopped out 3%. So here you can see it doesn't really hold either of these. We can also add the 50 EMA, which, the bigger the number, the slower it moves in comparison. So usually, you know, you want to be careful using a bunch of EMA lines. Let's change this 50, and let's put the color. We'll keep it, I guess that. So you can see here, respective, like it's holding this 50 EMA. If you look here, here, here. So I don't use a 50 EMA too much, but if I saw this buying wick off this 50 EMA, another wick here off the 50 EMA, another big buying wick here, I might have taken an early entry on this. I might have waited for it to touch 235, and I might have bought in. Not looking at anything else. Like the MACD is pointing straight down at this point. Volume's red, big drop, but like it's held every other time it touched today, and that could have been an 8 or 9% gain. And the 9 EMA on the stock, I like to use the 9 EMA, but you got to be careful with it because it follows pretty close to the stock. So the bigger the number, like 50 EMA, 200 EMA, it's going to respect that more. So you want to take into account that. And we look here, you also usually want to buy on off the 200 EMA for a dip trade. And you can see here, right off that 200 EMA, big buying wick. You could have been a buyer. You could have taken an early entry here because usually it holds, and you could have just stopped out if it dropped a little bit below. Or you could have waited for a green candle or two. So another safer entry would have been this next green candle right here, or this candle around 237. So that's another 10 cents. Again, touches this 200 EMA and bounces up. Here, drops below, goes back up, rejects off of these EMAs. So you can see, EMAs can be used as support and resistance. So this is the 20 EMA, this thick blue, and you can see it rejects here, pokes through, rejects off the 50 EMA, and then drops. So you could have shorted the stock around 239 here if you wanted, because you see it's been rejecting, a lot of indecision. Then boom, drops below 200 EMA. I know the stock ran a lot at the end of the day, so let's look at here. That's a big run up. Okay, let's look at this. All right, here, these big moves are when I usually look for the 9 EMA plays. When it's really choppy, 9 EMA doesn't work the best. Like at the beginning, like over here, you see the 9 EMA, this thin red line. It's not really working very well. So then we get over here. This 9 EMA, this huge gap up here. Let's see how you could have played this. Look at this right here. Or I was saying earlier, dips off this 200 EMA. I would have probably waited a little. You could have taken an entry here, or you could have waited, and then boom, taken another entry there. After you saw this bounce, you could take an entry on this bounce. And then I for sure would have been in, you see this volume here, how it's staircasing and it's huge movements, right? That's a huge sign that a stock could halt. I don't think this halted, but it did go up. Let's see. Like 15%, or yeah, around 15% or so. But so you would have wanted to have been a buy around this 200 EMA, and then you could have made 10%, 15% gains, and you would have wanted to stay in for this whole thing. Probably would have wanted to get out somewhere around this top of this candle once this closed, because the volume started to die out, and then it came back down a little. But buy off the 200 EMA. Here's the 9 EMA. I like to use this for when a stock is very big price. What am I trying to say? When the stock's running there. So we see here it's dipping down. This could have been a quick trade. It wouldn't have been that good, but kind of closes above the 9 EMA here, shoots back up. That'd be a hard play to do. But you can see here it's holding the 9 EMA here, drops down, hits 90 EMA, shoots up, drops down 90 EMA, shoots up. So you could have gone long there. It's hard because the 90 EMA isn't really holding well on the stock, and probably wouldn't have wanted to play off the 90 EMA because in the beginning of the day it was not holding the 90 EMA. Looks like the 20 EMA and the 50 EMA were the sweet spots on this stock. So like here, right before this huge move at the end of the day, we get a break above the 50 and the 20 EMA, drops back down. This is, remember the 50 EMA? It kind of holds right here. Then we get a green candle trying to get back above, and then these two candles hold, and then boom, probably an entry right around here, 273, 272. And then it drops back down, mini bull flag. Another dip off this 50 EMA right there. Could have bought there. Huge run up. I don't even know. Let's see. 25% gains on that. Again, if we keep looking here right before the end of the market, holds 20 EMA a little bit right here, but it's not really showing you too much yet. MACD is still below. Here, hits 50 EMA. You could have taken a position there because it's been holding 50 EMA all day. And then, it runs up again, 15%. So that might have been kind of hard to follow, but just rewatch the video if you need to. The main points are the 200 EMA. You want to take the break above. So here is the break above. You could have bought in there, and you could have held until it crossed below if you wanted, or exit when you're satisfied with profits. You also want to try and take dips on the 200 EMA. Bounce plays, they tend to work better on the 200 EMA. What else? 9 EMA, very risky. You want to make sure that the stock's respecting the 9 EMA beforehand. This stock, IMPP, not respecting the 9 EMA up here, so I wouldn't have tried to do plays on it over here. 20 EMA seemed to respect decently over here, so you would have wanted to have been looking for some plays, but this stock seemed like it was respecting the 50 EMA the most. It bounced off it here 1, 2, 3, 4 times, so you could have taken dip trades here, and it popped back up for huge gains. Then over here, it kind of holds this 50 EMA and touches 200 EMA. That could have been a huge play. Here, bounces off 50 EMA, shoots up. So you want to look for, just remember, a nice wick off of the EMA that you're looking to buy off of, and then wait for 1 or 2 green candles that are hopefully higher. Like if you're looking to buy here, just make sure you probably enter around here, because it's curling up. It's doing this little motion. So that's all I got for you guys on EMAs. DM me on Discord if you have questions or suggestions that you want videos on. And yeah, so yeah.